Hey, what's going on? Jim, come on, man. When you enter the room, you are way smarter than the room temperature. I'm very confident of that. So, what's going on, everybody? Thank you for swinging on by the channel. And it's time for our weekly communion together once again. My goodness, I didn't mute my phone. Live, live, everybody, right? I'm paranoid that I'm not broadcasting to the world, so there we go. Okay, all is well. Once again, let's try that. Let's start this over. Hey, what's going on, everybody? I'm Russ. This is the Dapper Dividends YouTube channel, podcast, newsletter, website, and whatever else you want me to be. I will be that for you for about the next 60 minutes that we have together. And we're going to talk about, dude, the 7 stocks that are paying me $300 a month. Yeah, not every month. Okay, this is taking the 12-month, the annual total, dividing it by 12. So, yeah, whatever. We're just going to get that out there. So it had to work for the thumbnail, but technically it's per month if you divide that by the 12 months. So we will be talking about that in a minute. But while we're getting warmed up and we got a few people filing in, again, happy Sunday to you. Hopefully all your football teams brought you all the joy and pleasure that you are looking for in the wide, wonderful world of sports. And I want to, oh boy, yeah, Matt, right away. I'll just touch on this real quick. But for those of you that are coming in a few days from now and watching this on replay, we don't want to keep it too long. We'll get back to the chat. I want to get right into the main event. I don't want to keep you guys waiting, but office REITs are too risky. Yeah, I think so. And I actually have something funny to show on that. Check this out. For all of you, I am doing, I'm putting together a big spreadsheet on a bunch of REITs. I'm going to probably have about 100 in there with all kinds of metrics. You'll be able to get this spreadsheet from me. It's probably not going to be ready until like Thursday, I hope, something like that. But check this out. So one of the companies that I was researching, I'm going to hide your comment, Matt, and thank you very much again for your comment. So weirdly, I don't know what's going on here with them, but let me share this entire screen. Let's do it right. Bring all you people with me. So check this out. This is one of the companies that I just was looking at as before we came on was BXP, which is Boston Properties. There we go. Okay, now we're going. Now we're on. But look at BXP. This caught my attention, where they say, as the largest publicly traded developer, owner, and manager of premier workplaces in the United States. I'm like, workplaces? I see what you did there. It's no longer offices. We don't have offices anymore. We have workplaces. Don't be fooled. A workplace is just a new name, apparently, for an office. So I thought that was kind of funny that they're not workplaces, people. They're offices, or they're not offices. They're work. I mucked it up. But one more thing. Sorry. Here we go. Look at this. We did this last week. We talked about Pepsi and their free cash flow payout ratio being way too high. Well, this week, PepsiCo had earnings, and wouldn't you know it, their free cash flow payout ratio, everybody take a little bit of a sigh of relief, because we're currently at 96% last 12 months, really high. But if you remember, they had expected it to be, the analysts did, about 130%, 133, something like that. So now the next 12 months is expected to be much more manageable, 78%. So it does look like that 111 was the aberration, and it looks like they are coming down now. So that is really good to see from PepsiCo. So I wanted to share that with all you all. And yeah, and as we are, they're at the low end of their 52-week price range. They got as low as 58. And I was just poking around here on good old alpha spread, where their intrinsic valuation that they give, remember, we've talked about intrinsic valuation. It's a guess. Nobody knows what the future cash flow is going to be. So it can vary wildly between different people. And it's like looking through the Hubble telescope. Turn it a fraction of an inch in either direction, you're looking at a completely different galaxy. So take this with a grain of salt that it's $168. So on the base case, if things are flat, flat trajectory, flattish as a radish, we say around here, be about $168. And the worst case, if we have negative, I think negative 5% for the next 5 years growth, be about $139. So if you want a bigger margin of safety, you're going to have to wait until the mid 130s. If it gets there, we don't know if it will. But now what you people all filed in here for, because you saw the thumbnail and it's what you clicked on this for, is the stocks, the top stocks that are paying me the top dividends right now. Couple good ones, a couple stinkers in there, but this is all on Simply Safe Dividends, by the way, where currently the Patty is $6,780 on 3 accounts that we do share. Granted, this is not everything that's in our net worth. We have a sizable 401k that we don't share on the channel just because it's, not as entertaining, but I think we already sorted this. Here we go. So we sort this by annual income, and you can, poke around at this if you want, pause the screen, whatever, later on. But number one, Aries Capital, ticker ARCC. We're going to go through this super quick because I want to talk to you guys. I don't want to be far behind. So it's all pretty self-explanatory right there. 700, the lucky 777. We do have this in 2 accounts. I do hold them in the taxable account. I just decided, you know what, I'll take the higher payout ratio. I know I'll pay a little bit extra taxes on those. It's okay. Next Star Media in the number 2 spot. That's shot up pretty quickly, $540. Again, we are down 12% on those shares, but I think they're going to recover, and we'll see. I'm not going to be selling them anytime soon. With the presidential election, if you don't know them, they're the nation's largest U.S. broadcaster. Most of the local television news stations, those are all Nexstar Media owned. Most of them in the 1 or top 2 is Nexstar Media. So they're going to get a boatload of money coming in from the presidential election going on next year. Fun times, everybody, right? Number 3 spot, we got PepsiCo, $506 of annual income. We're up 6.4% on that. It was much, much higher a couple months ago when we were pushing $200 a share, but hey, it's okay. I feel so much better seeing that free cash flow payout ratio under 100%. And I really, really want to see it back into the 70s. So we'll see if it gets there. The number 4 spot, this one, shout out to Troy Marsh from the Dividend Obsession channel. I did an interview with him yesterday. It's over 2 hour long. I don't know who's going to be watching that thing still, but anyway, we talked about AT&T and we talked about my stubbornness. We talked about the opportunity cost, the time value of that money, and you see them down 38%. I'm so stubborn because I'm the one that tells you guys, and I'm human, right? But I tell you people that you don't have to make your money back the same way you lost it. So I should be putting that money into a higher conviction play. But again, share your thoughts on this. What would you do in my situation? Would you just bite the bullet, put it into something else that I have a higher conviction on, and then just probably watch AT&T rock it up, right? So anyway, that's AT&T. That's the biggest black eye. Realty income. We can talk about REITs a little bit later on. We know what's going on with them, but yeah, I think they're a bond proxy. They have a little bit of debt. I think 52% of all of their debt is going to be maturing before 2028 starts. So they're going to have to refinance that. And the saying is stay alive till 25, meaning that the market's expecting the Fed to really start cutting rates into 2025 or right before 2025. So it's like, stay alive till 25 and hopefully you don't have to refinance until 2025 and you don't have to do it at higher rates. But $479 in realty income, we're going to be holding them. We're going to keep we're going to be keeping on averaging down a little bit, 156 shares in our self-directed IRA for that. Yeah, dude, 6% yield on dividend yield right now. And our yield is 5%. So 1 basis point higher than that. And then in the number 6 position, Main Street Capital, I'll go up here so you can look at what else I got in the portfolio. Main Street Capital, number 6 position, $423 of annual income. And yeah, we're just holding them. I'm not really adding more, not looking to, unless they get to the our cost basis, which is $37 a share. Would love to see them way or more around that if we're going to be adding. But yeah, Ares Capital, Main Street Capital are 2 of the best business development companies. They have just a lot of diversified accounts. They don't have all their eggs in one basket. They are mostly first lien holders of debt. So if companies do default, hey, they get all their assets. So $423 on Main Street Capital. And then rounding up the number 7 spot is good old SCHD, the Schwab US Dividend Equity ETF, 149 shares in the Roth. And I will be buying more of that. Currently, it is 7.6% of the entire portfolio. I will be getting that to 10% and maybe one day 20% just because it's so much of a no-brainer. You really don't have to think about it. Buying that basket of 100 solid dividend-paying stocks. Some I wish that were not in there and others were, but that's what you get when you buy a ETF. So $390 annual income on SCHD. And since we're here, if any of you are watching, you want to pause this and take a peek, you can head to dapperdividends.com, click the link below, or just type it in your browser. And we do share the portfolios at the dividend tracker there, so you can see what's going on. But yeah, we'll get to the bottom. 32 positions. I may be rolling it back. I was looking at Hershey, but I feel I have enough exposure with PepsiCo. And there you go. Target, we're down 16% on that one. I still think they're a good buy. Not a good buy, but a good buy for the long term. And we may be adding more, but there you go. That's about that. And then our 2 lonely non-dividend payers here, Harrow Incorporated. They changed their name from Harrow Health to Harrow Incorporated, and Warner Brothers Discovery. Still deciding what I want to do with these dogs, down 65%, and got a whole slew of dividends. If you get the newsletter, So, all right, there you go. I can't see your guys' comments. It bugs the hell out of me. So I'm going to jump back in here and fire away. I'm going to rocket through, get caught up to all you people there. So there you go. That's some of what we got going on. What do you guys think about AT&T? What would you do? Because I think that, as we've talked about, their total return performance is terrible. They're in a highly competitive industry, and it's also highly capital intensive, meaning they have to use a lot of money. But as their CFO, Pascal DeRoche, has pretty much given me the Kool-Aid, and I've drunk some of it, is that they said that they spent the last few years building out the infrastructure, the 5G, the spectrum, all this. So they're really going to start reaping the rewards in 2024 and 2025. And the cash is just going to come raining in. But then it's like, well, then it's going to be 6G, and then it's going to be more fiber, or it's going to be something that they're going to have to build out. So yeah, let me hear. I don't know about the, let's see, Jim. By the way, thanks for joining us, Jim. Do you have any thoughts on this madness going on in the Middle East? I hope I'm not saying too much, but I won't say anymore. But Jim has some history with our military, so we'll leave it at that. I don't know if I'm not supposed to say any more, buddy. So, any thoughts on Kenvue? No, because I'm not buying Kenvue. I am actually thinking of buying more J&J this week using some dividends. Now that I'm up to 100 shares of Nexstar, I'm looking at buying more J&J. I was really hoping to get it in the 140s, but it just doesn't seem to be getting there. So we'll see if that does that. Eric, I don't know if that means you're buying JPM, Walgreens, Verizon, Target, Coca-Cola. Coca-Cola for the kids, for the win. What do they do? That for the win? Yeah, Walgreens, Verizon. I gave you my thoughts on Target, but uh, I would stay away from Walgreens. That looks to be. I know they have the new CEO. I think they're going to cut that dividend. I don't know how much. Word on the street is like 30 to 50% is that dividend may be getting cut. I could totally see it. They have to really start doing something with that balance sheet. Um, yeah, Pat. Hey, this is just like investing. There's probably a lot of parallels between fantasy football, real life sports, and investing, meaning that we don't know what's going to happen. We all have our guess, but we don't know what's going to happen. So, hey, good on you to all the Lions fans out there. I do have Amon-Ra St. Brown, the sun god, so on my team. Thank you. Kevin, haven't bought any of those either. Oh, 32 positions for you, buddy. We're similar in that. Let's see what you guys doing. Workplace, premier workplace means are all corner offices. Dude, we're going to start. There you go, Jim. We're all going to start a business and it's going to be nothing but corner offices. So yeah, I was reading that and I was like, I thought this was an office REIT and I'm looking for the word office and it just kept saying workplace. Everywhere they got workplace. It's like workplace. That's you sneaky, sneaky dog, you BXP. You don't have offices anymore. You have workplaces, a place where work is done. Sounds like an office to me. What's going on, JR? I will give you the salute. We're going to teach you people how to salute. But hey, John, I saw you guys, a couple of you emailed. If you don't get the newsletter, I share the dividends received, everything we bought, anything we sold. I give a thought at the beginning, still playing around with how we want to do that. I think most of you like it, just giving some motivating thing. It's kind of for me too, writing that. But the next shoe to drop on retail space, like drugstores, as they may go away too. Yeah, well, I don't think offices are going away. I just think that they're going to have less occupancy. And you know what? There's a possibility, and this is just my thought. This is just wild speculation. I have a feeling that a lot of these office buildings are going to be converted by developers into living spaces. We're kind of hurting for people selling their houses. Dude, we have a 2.25% mortgage. We're not moving anytime soon. Like, I don't want to give that up. So, we're probably going to be putting money into this place. And, it was built in 1972, I think. And we did some stuff when we moved in. But I think that, that's like a lot of people are doing what we're doing. They're like, we got this super low mortgage. I don't want to sell. So let's just renovate. So that's going to be good for contractors. And what do contractors use when they renovate? Yep, that's right. Williams Sonoma, even on the finishing end, but Home Depot, Lowe's, things like that. So I think it could be good for that industry. But yeah, as far as the next shoe to drop, probably higher for longer rates. I know. Yeah, consumers spending money. Honestly, that's what's propped it up. I think I read a stat. Does anyone know this? That the US GDP is 70% consumer spending. So I think if and when the consumer stops spending money, that is when we're going to see the next shoe drop, because consumers spending less money means businesses taking in less money, means they're probably going to lay off more people. And when you got people that are laid off, they're not going to be spending as much because money's going to be tight. So I think that could be the whole thing we've been waiting for, this recession that never gets here. So thoughts on that. Regarding the REITs that you own, what kind of properties do they own? So it's all commercial real estate. I don't own, and actually in this list I'm doing, I've noticed a few of the apartment REITs look really interesting. But yeah, the ones I'm in are all just commercial real estate. And if you guys don't know, you hear about, CRE, are they in CRE? All that commercial real estate means that a business is there making money. So that's Walgreens, Dollar General. Those are like Realty income is 100% commercial real estate. I mean, if it's, the only thing, and this is what I'm actually going to have to look into, because so like a timber REIT, I believe that is not commercial real estate because there's not a business using that property to make money. Instead, it's land that they're extracting resources from. So when I get to the timber REITs, because I have a little column on my on the spreadsheet for CRE exposure and for office space exposure. So CRE, like realty income, 100% CRE. But when we get to like Mid America Properties, ticker MAA, it's 0 and 0. Because it's residential property, it's not commercial. There's no commerce being done there, at least under the law. You could have, we can let our minds wander, but for all intents and purposes of the law, there's no commercial business being done in somebody's apartment, which makes me think though, but what if, if you're working from home, if you run your own business out of your apartment, anyway, you guys know what I'm saying. So retail and experiential, maybe we'll see. That would be bad for Simon Property Group, which I do hold. But yeah, that's still commercial real estate, the experiential. That's business being used for commerce, that real estate. Yeah, grocery stores maybe. Kroger's one I was looking at. I mean, that's one I don't own. There you go. Maybe I should just sell half of the AT&T position and put it into Kroger. Oh, look at this. We got Gorilla Nurse from Wisconsin. What part of Wisco are you from? Yeah, I wanted to say up the north. Yeah, hey there. I'm getting caught up to you guys. I'm going to do this. So I am going to try to go fast. Oh, by the way, you know me. I'm in Chicago. You probably can't tell. It's the weirdest thing. When I talk to people, they all got accents. Everyone has an accent but me. No accent here from this guy. I tease and I kid because I care and I deeply love you. I'm going to read a book called How to Be a Benevolent Cult Leader. I listened to Jason Stapleton. He's started out as a libertarian podcast, which I was, and it's weird. He's a dude that's a year younger than me, but he's an entrepreneur. He helps entrepreneurs. And I don't know what I was saying because I'm reading your comment now, John. Utilities and communication are bond proxies. Yeah, utilities are absolutely bond proxies. So are the consumer staples like PepsiCo, Coca-Cola. So you got, from what I can tell, REITs, utilities, and the super stable companies, although Procter & Gamble hasn't gotten hit that hard. But if you're new and you're watching, all that a bond proxy means is that when rates were super, super duper low, like 0.30%, whatever it was, 30 basis points. I don't know how to say it. That's probably saying it right. I don't know why they can't just say 0.30%. They got to get all cute. I did hear the explanation once. It's because there's confusion with interest rates and a percentage increase or gain, something like that. But what were we saying? Oh, yes. Oh, yes. What we were talking about was, by the way, RIP Suzanne Summers. Used to watch her on Three's Company, 76 years old, died the day before her 77th birthday from cancer. So as you guys know, we're all going soon. It ties into my last video I put out yesterday, but bond proxies. Okay. So when rates are super low, there's people that are looking for yield on their money, and they don't want to risk a lot of their dollars into something like a Tesla, something really volatile where it may go way up and then go way down. So they look for things that are more stable. And traditionally, REITs have been more stable. Utilities have been more stable, especially the government regulated utilities like a Duke Realty, Duke Energy, Duke Realty. We do work for them. Duke Energy or a Southern company, stuff like that. And then in my opinion, as we looked at last week with PepsiCo, the consumer staples, Coca-Cola, Procter & Gamble, Kraft Heinz, maybe things like that, people know aren't going to go anywhere. They're these old stable brands, 100 years they've been around plus. So as soon as the rates start going up, it makes the risk-free rate, like on the 10-year treasury, meaning you don't have to ever worry about the principal going down. Yes, the bond price will fluctuate up and down, but if you hold that bond to maturity, you will get your principal back guaranteed plus all of that interest. So that's why they call it the risk-free rate. The only risk is the government defaulting, which, because they have the printing press, and you all seen the printer go burr meme. Yeah, it's not going to happen. So anyway, so when the rates go up, it sucks away. It's competition for those bond proxies or those stocks. So bonds compete with the stock market. And when the rates go up, it sucks money away from those stocks. So people are selling them off, and they may be down until it looks like the Fed is going to pause or officially starts cutting the interest rates once again. But I think now is a great time to be buying REITs. They will recover one day, but honestly, we don't know if it's 6 months or 6 years. But I intend, with the REITs I hold, to just collect the dividend income. And that's why we have to try and find, which is why I'm doing this example, this spreadsheet that I'm building out, to look for the REITs that are a little bit more solid. Yeah, I'm going to just ramble on if I don't stop. So if you want, we can pick this up once I get caught up. But yeah, I want to hear from you people. I don't need to hear myself rambling, but I'm hoping it helps you, you know? Oh, you bought Pfizer, Main Street Capital, Vichi, Viatris, and Tyson. Why did you buy more at Pfizer? I'm just curious on that. I was doing dishes and I was just listening to Invest Talk, and Justin Klein from Invest Talk, somebody called and asked about Pfizer, and I agree with him. He just was like, I wouldn't touch Pfizer because since post-COVID, they are clearly losing revenue. They got a lot of debt. Just looks not as well as a Johnson and Johnson, you know? So I'd just be curious, like, what your thought. I mean, maybe you know something I don't. And that's the thing. When you hear people like him or myself, I'm going to put myself in his category, but we don't know. They don't know what's going to happen. Nobody knows what's going to happen. We're all just making best guesses with the information we have right now here today. Thoughts on Kenvue versus J&J? J&J, baby. I'm going J&J. You got the med tech, the pharmaceutical. I think they have like 21 or 26 $1 billion revenue generating brands between the med tech and the pharmaceuticals. So I just think it's so much stronger. There's so much growth potentiality there. And quite honestly, I mean, just, I think it's better. So I'm not going to be buying any Kenvue, but I'd like to know if you guys would. Well, Pat, because I'm super stubborn, we're probably going to be holding together, but I don't know. I'm going to think about it. I try not to make rash decisions. And honestly, I'll probably just hold AT&T until the end of the year and see what goes on with that. So nice. A lot of you are holding AT&T. Very interesting. They do have a lot of debt, but as I've talked about before, some of their debt is not due until 2097. I don't know the percentage of that, which is, but the Fortress of Solitude. Wait a minute. Isn't that where that was Superman, right? What was Superman's lair? I think that was the Fortress of Solitude, right? Apologies if you can hear. My cat just opened the door, Louie, and the Samsung washing machine with that silly little tone I'm going to be humming until I die. Anyway, Jim, I'm sorry. Sorry, buddy. But US Bank, right? US Bank, Lowe's, JPM last week, looking to add more EPD and O. I think those are solid. Except USB. Now, Bank of America is the one that I think has more issues, right? Holding 102 shares, I think, of Pfizer. That is what you're holding. And if you just popped on, let us know what you've been buying, what you're doing, what you're drinking, what you're wearing, please don't let us know what you're wearing. That's creepy. Maybe. I don't know. Unless it's something funny and PG. It's not going to offend me, though. AT&T, as long as the dividends hold, it's a hold. Yeah, I don't think they're going to be raising the dividend anytime soon. But honestly, that could be a catalyst. If they raise the dividend, might get people coming in and buying. Look at this. Everybody increase the AT&T position. Nice. Okay, you're holding AT&T, not Pfizer. Yeah, interesting. I love hearing your guys' thoughts on this because, and of course, this is always going to be the debate, what's going on. But yeah, put it that way too, right? AT&T, they were a bond proxy, I think. But yeah, oh my God. We could look it up. It was like negative 2% their 20-year return. I don't have the charts so I'm reading this, talking to all y'all out there. But hey, Gunny, what's up, man? Thank you. This we did an interview together, and if you haven't checked it out, it was last week. So please do check that interview out. It's only 30 minutes. I try to keep them 30 minutes. 2 hours and 15 minutes. I think Troy, no offense, is a bit too long, the one I'm on, but yeah, dude, I'm sticking to J&J. Oh, by the way, I did start VA Claims Insider, so I am going through with that, and they're showing a commercial on my live feed. What the hell? My phone's next to me. Yeah, good to see you, man. Good to see you. Not sell tea a lot. Oh, it would sell tea. So many other opportunities right now. Bought Hershey's and Texas Roadhouse this week. I think I'm going to sleep on it for probably the end of the year with AT&T, but it's stubborn. It's just me being like a stubborn. Yeah, they're garbage. So's Verizon. I know, dude. And as we talked about, I just struggle with that, with my not wanting to take the loss. It just, and this is part of us as investors, right? Is it just feels so freaking awful to sell for that loss, because it feels like I just made a mistake, and now I'm actually like putting the finalized rubber stamp on it, being like, I effed up this one. I made a mistake. I bought wrong. But hey, it's tuition of the market, right? As long as we learn and we use that lesson into what we're doing next. And like we said, you don't have to make your money back the same way you lost it. So look at a lot of us, dude. A lot of us here own tea. Lisa Snow. Very nice. You're waiting for an update to sell tea. What kind of an update are you looking at? Because I'm waiting for an update too. Hopefully like a $7 update. I'm waiting to sell. Dude, if AT&T jumps $7 in a day, I have a feeling there'd be a lot of people that would be selling it and would probably crash the price. So yeah, maybe that's weighing down on it a little bit too. Hey, Edison, what's going on? What's going on, Edison? You bought PepsiCo, McDonald's, and NASDAQ. Now, that's a name we don't hear a lot around these parts, and actually around YouTube parts. Not a lot of people even know NASDAQ. Not only is it a publicly traded company, but that they do pay a dividend too. ASML, never really looked into that much. And yeah, ASML does the lithography machines, right? They make the machines that make the chips, correct? Tell me if I'm wrong on that. All right, I'm almost caught up to you guys. I love it. Matt Bittner. High-rise office buildings are going to be very expensive to retrofit to residential. Yeah, I have, like I said, that's just wild speculation on my part. I've done no thinking on this. I've done no research. It's just being like, there's people that need places to live. They can't find places to live. And there's unoccupied office buildings. So in my mind, I'm like, just put them in the unoccupied office buildings, you know? Look at this, Mayan. Mayan, I don't know what that was. Nice to see you back. Lashinsky. I was a ski. I was born a ski. This name Knopf that you see, it's not my birth name. I had a ski. North Pole, Alaska. Dude, are you on like how are you satellite? How are you connecting? Do they have that fiber? Is it AT&T that's connecting? Just buying SCHD and REITs. I like that. Yeah, consumer spending, they'll just take it out of credit. Yeah, man, we're seeing that, right? Credit card loans are getting up there. They're getting the credit cards are starting to get maxed out. So we'll see. I guess, hey, maybe you nailed it. Maybe that is when the shoe drops, is when the consumer can't take out any more credit cards and they're all maxed out. They stop spending. Maybe that's when. 10 years, everybody's going to be working from home. Retails will be, I don't know if retail stores will be shuttered. Homeschooled. Oh, dude, you know what it's going to be? How many of you guys have seen Wally, right? What was the store? It started with a B, right? Where like everything was the brand. I don't want to Google it. Somebody tell me. You Google it. But yeah, in Wally, the kids, I like Wally. I got teared up at Wally. This guy, What has two thumbs and got teared up at cartoon robots? This guy. You know why? Storytelling. Storytelling is so very powerful, and the story went beyond cartoon robots, and the story, spoke to our minds. So, but yeah, it's a lovely movie. I can't think of it. Let's see. I don't think they'll be renovated. Yeah, and you're probably right. Like I said, just wild ass speculation on my point. But Mid America versus Avalon Bay, those both look really interesting, and I've been uncovering some pretty cool leads that I'm going to be looking more into by looking at with these REITs. I'm looking at like the 10-year adjusted funds from operation per share growth. I'm looking at the average share dilution and the average total sales because I was thinking, right? I always tell you guys, as long as they're growing the total sales, then it's okay if they're diluting the shareholders. But I want to know, and I'm putting it to a number over the last 10 years, what does it look like with their average share growth, and then compare that to the average total sales over 10 years, and then the average AFFO per share. And it's kind of interesting. You'll see some REITs where it's like they've increased their shares at an average of, like, we'll say 7% over 10 years. But then you look at the AFFO per share has only been like 5% average. But there's others where the FFO per share has been like 9% average. So you want to see it higher, and it means that they're just being more profitable. You know what album that made me sound like? How many of you people, my grandfather was a realtor, so I don't, I won't name names, but you may be able to guess. There's some YouTubers I've heard, and they say realty, realty, like there's no I in it. It's REALTY, real T. It's not realty. I mean, it's splitting here. We know what they're talking about, but for somebody that is the grandson of a realtor who did it for almost 60 years, it's realty. It's realtors. It's not realty. And I know because what it feels like, because in one of my videos, I used to say subsidiary. I can't even do it now because I've corrected it. I've burned it in my brain. Subsidiary, but I think I used to say subsidiary. So somebody was like, "Hey, buddy, it's subsidiary, not subsidiary." So, Ivy, I think we've figured out you're not my daughter. I do have my daughter Ivy. She's probably playing. I don't know what she's doing up there, but teenagers. My accent comes out when I say Chicago. Yeah, well. Hey, you know what I mean? I can't even do it. You see what I mean? Go watch the Cubs and get some deep dish pizza and some sausage. It's the damnedest thing. When I try to do a Chicago accent, most of the time it sounds like Brooklyn or New York or something. And even though I've never been there, I don't know. We'll just speak how I speak, and how it comes out, right? Just how it comes out, everybody. Yeah. The one person that just made 59 that came in is like, what in the hell is going on here? North of Madison. Don't you know? Oh, yeah, don't you know? That's right. That's right. Thank you. Because I do the yeah hater. I think that's most of you people aren't going to understand this, but I think that's the people that live in the Upper Peninsula of Michigan. They call them the Upers, Upper Peninsula, UP, the Upers. Yeah, hater, we're the Upers. But you're right. They do say that. Yeah, don't you know? Oh, yeah, don't you know? Thank you. I love it. I love our accents in this country. It's such a big and beautiful country, right? Dish going into earnings in the next few. Oh, we'll do news. Shoot, we got to do news. Short squeeze of PE. Sea Flounder, but who's Sea Flounder? Millions of shares from 6. I don't know who Sea Flounder is. That reference is lost on me. I'm so very sorry, Michael Anthony. I'm assuming you're not the Michael Anthony, bass player extraordinaire for Van Halen, or I guess ex Van Halen, right? Eddie has poor Eddie. God rest his soul. They're not playing anymore, are they? I don't even know. Eddie passed away, and his son Wolfgang was playing bass, I think, in the band. 90 shares of Kenview. Nice. Are you going to get to that 100? And Journeyman, nice to see you again. Why do you like them? We talk on Twitter sometimes. I don't get there enough. I only have so many hours in the day. Oil equity is doing good. Yeah, you're right. Oil did take a spike. I know gold had a, and it could get crazy. I hope to God that this doesn't turn into another world war, because like a proxy battle, like makes me think of World War One. That was a proxy war. That's all that it was. And uh, when Archduke Franz Ferdinand was assassinated, here's this guy making fun of people like, hey, you're sailing Realty. What's the matter with you? And then I'm like, hey, when this guy was assassinated, when I'm sorry, I think it was Gavrilo Princip assassinated Archduke Franz Ferdinand, right? Who was Austro-Hungarian. I don't know. I'm bad at it. I should know this more better, but there's bad English too thrown in there just for good measure. But yeah, it was a proxy battle. So it was just, I get my friend to support me, and then he's going to get his, and it just kept going out and out and out. And yeah, I hope we don't see that. But yeah, it's unfortunate, and man, God bless all the people out there that are affected, and hopefully this gets resolved pretty soon. So Michael Anthony, upgrade 7 different men. AT&T make a bid on Dish. Why would you bid on Dish? It's going away. Please, for the love of God, AT&T, and all that is holy with John Stanky, I would not want to see him buy Dish. What are you going to do with Dish? We got rid of our Dish so long ago. I'm going to try to, I'm almost caught up to you people. Dude, I'm almost at the live here with you peeps. CMB is a special tonight, talking about the war. Oh man. Yeah, it could get rough. It could get ugly, but companies like PepsiCo, they've gone through 2 world wars. I mean, 9/11, just all the different things that PepsiCo and Coca-Cola have gone through, and Procter and Gamble. Let's carry Dr. Pepper even, I think. I don't know how old they are. AMT, DLR, and PLD. Nice. Yeah, Prologis, dude. Tutomi, thank you for coming to buy the channel. We do work for Prologis, so they're a very strong one. And we may run into this problem again when the market, if and when it crashes. It's like, I think I talked about I don't remember who. Gunny, I don't think we talked about this, but it's like there's so much to bump. When everything's on sale, it's hard to know what to focus on, because it's like a kid in a candy store. You just don't have enough money to buy everything. Oh, you're a Youper, right? Yeah. Oh, don't you know? It's okay. Yeah. Lived in Huff. All right, cool. I love it, dude. We got some Youpers then. Good. I've never been. One day I do hope to be. They're talking about that. Chickenfoot now is playing guitar in, I think, or is it Michael Anthony? I'm confused, man. I'm having 17 conversations at once, and I love it. I love it. The food companies made new lows. Yeah, all those ones you've listed, Michael. Yeah, I think it's just because they're going to reach a point, and this is kind of like the beauty of dividend investing, is that when these dividend-paying stocks, just because the market has wild hair or there's fear and they just start selling everything, in particular, the dividend stocks that the business is still sound and the fundamentals are good, then that dividend yield it's what we call the accidental high yield, or the yield is getting high because the stock keeps getting sold off. So it'll reach a point where, I mean, quite honestly, if like a Procter and Gamble started going so low as paying a 5% yield, there would be a no-brainer. It would never get to that. I would probably, I don't know what I would do, but if Procter and Gamble, just because the market was selling off, I may start using a credit card to buy stock at that point, because, I don't want nobody do that. I'm not going to do that. Well, somebody needs to get a handle on. He's from Wyoming, Josh, or he went to school in Wyoming. Josh, don't call him Woody. Well, we'll see. Oh, hot dog. Wait, what? I'm missing that, Pat. You work with Volworth. I remember Woolworth, but yeah, I love it, dude. I love it. I don't want to get. I could talk. I could have a history chat. I love reading it, but so much goes on in my head. I forget some of the finer points of what I read. Like I'll remember the over. I just don't have that mental capacity to remember like the specific details and some of the specific names, but I'll retain a lot of information up in this old dome cranium noggin and about the generals of it. So anyway, I don't think I talked about that. You said the buildup was a proxy war. Yeah. Okay. Good. Well, that's a good point. I swear I thought I remember, especially Dan Carlin, Hardcore History, fantastic podcast. I thought it was World War One, and I obviously could be mistaken. Very well, we know I could be mistaken. Look who's still holding T down 23%, AT&T. But yeah, I thought World War One was a proxy war, so I could be wrong. If anybody knows, let me know. Especially like Lamar, LAMR, isn't that the billboards, right? Lamar, they do billboards. I think in a recession they could get hurt because the ad spend, from what I've learned, is that in recessions that ad spend is usually one of the first things to go. So that's one of the easiest cuts that businesses can make. So if businesses aren't spending on ads, then right, that probably would negatively impact, at least for the duration of the recession, like Lamar. And then cold, I'm not familiar with cold, if that's cold storage or something. I don't remember. Dish isn't going away. So many deals with Amazon. Yeah, it may not. And this is where it comes down to like your personal preference of investing. I personally think I don't know. Maybe going away is the wrong word, but I just know less and less people use the like Dish. So, it may not. I may be wrong, but personally, I would not feel comfortable, right? Because like we talked about in the newsletter, when we buy a stock, when we are investing, we're actually buying a sliver of that business, taking ownership. And like Warren Buffett said, is that when you buy a stock, you should think of it as you are buying the entire business from top to bottom, not a sliver. You are owning the whole business. And if you would not be comfortable owning 100% of the business, then you probably shouldn't be owning one share of their stock. So that's Warren's thoughts, not always right, but yeah, good point. I don't know. We'll see what happens, right? We're just going to have to let time tell. More T row, people still putting money. Yeah, they could pull back for sure in a recession. They could get hit if things get tight. People are saving money, but I think T row, they have a really good balance sheet. So I think they're going to be okay. And I know I have exposure to them inside of mutual funds. And I believe SCHD. I don't remember exactly. So anyone correct me if I'm wrong. All right, I'm almost caught to you guys. I get so bad at it. Look at this, Mike. Just got on 355 South from 75th Street. Buddy, 355 South from 75th Street. So he's over there. He's over there by Bolingbrook. There's a Costco near there. That's on Boughton. So, dude, you're close. You're almost gonna be arriving at my house here soon. So I'm glad you like listening in. And yeah, I drove by there all the time. 355 and 75th, man. Hit me up, Russ at dapperdividends.com. We should meet up and have a coffee or something. I don't know, whatever, a beer. I say a beer, but I don't know. Maybe some people are raging alcoholics and they shouldn't be having a beer. You don't know. I don't know. You know more about me than I know about you, all of you. I do know I love you though, because you're here watching me. So why wouldn't I love you? Thank you. What did I say? Overspot office. Yeah, a couple people that probably know more than I do. It may be very expensive, but there you go. Maybe if there's competition and there's motivation, right? What does Charlie Munger say? Show me the incentive and I'll show you the outcome. So if there's incentive there and they can make the numbers work, maybe it happens. I don't know. Oh, the co-flounder. Dish, the co-flounder, is the man who started Dish in the 80s. Yeah, I really don't know much about Dish, so I'll just take your word for it. But I think they're going away. I don't know. I hope I'm wrong. If you're invested heavily, I hope I'm wrong. I'm not invested in them, so it really won't affect me. But that's just my opinion. Just my opinion, which God knows is wrong quite often. What companies do you think will do the convergence, dude? I have no idea. Maybe the home builders would do it. Private, I don't know. We don't know. Dude, is anybody here bullish on Vici? I'm bullish on Ed Petoniak, the CEO of Vici Properties. And I know that some people in the community are saying that GLPI, gaming leisure properties, that they have a bigger runway to growth because they're more like, so Vici is basically the Vegas Strip. They own most of the property on the Vegas Strip. And then I think they own places in Canada. They're trying to get into experiential, like Great Wolf Lodge. There's a holistic retreat place down. I can't think of the name right now, down in Arizona, but they're trying to grow as well outside of the gambling and gaming. But GLPI, gaming and leisure properties, they are in like the smaller, more, I guess, rural or suburban throughout the country. And I think particularly the South too, like a lot of those casino gambling properties, which is fantastic. I think that's more fragmented. So uh, I'm bullish on Vici. We have currently, I think, 125 shares or so of Vici in the self-directed retirement account. So I think they're just going to keep trying to grow. This is one of the knocks on Realty Income, right? Is that they're so big, what, $50 billion of assets under management, or that's, I don't know if that's the right thing to say, but they have $50 billion worth of, I don't know, brain fart time. They're big. And when they buy the Bellagio, when they take that stake into the Bellagio, like the 21% stake, it's like a 1%. It doesn't barely moves the needle for the business. So they're struggling, I think, to find ways to grow. Where that's where like a lot of people like Agree Realty, ADC, that they're like a smaller Realty Income, and they can have more of a runway to grow. They can do things that are going to be more accretive to the AFFO per share. So ad spend that negatively impacts all social media stocks as well. Yeah, good point. I know as soon as things start shaking out, I hear a lot of YouTubers that rely on YouTube. I don't. This is a hobby. This is a community I love talking to, but this is a hobby that pays me a few $100 a month. And I know it sounds like a lot. It's really not. If you hear what some of these other YouTubers make, yeah, like $300 a month is just, it literally is peanuts. It is a hobby that I enjoy doing that kicks me back a few bucks every month. So, but yeah, you're right. Advertisers are spending less money. So those ads you watch when the videos start, they're paying less to put to Alphabet to put those on to Google. So that affects the YouTubers. And if YouTubers are getting less money, some of them do it for the money. So they may put out less content. I don't know. It's just, yeah, it's just interesting. It's a trickle down effect, right? It just goes to show. I heard somebody, I think it was on StockTwits when PepsiCo's going down. They're like, screw this evil company making people diabetic. Get rid of them. And I'm just thinking, like, could you imagine? It's easy to say that, but thousands, probably millions of people all around the world would be affected if PepsiCo went away tomorrow. I mean, it's not just the people that are employed by PepsiCo, but all the shops that have their products, all the farmers that grow for PepsiCo, the potato farmers, cane sugar. I think there's cane sugar coming from foreign countries down in South America. I mean, cocoa beans, the cocoa bean growers, the people that transport the cocoa beans. I mean, it gets to be this widening circle of people that are touched by this PepsiCo company. And it's so much more than just the people that are directly employed by PepsiCo. And as long as people are voting with their dollars, and, you don't have to like it. I think some people around my house, hello, I just saw a box in my recycling bin of these Hershey's cupcake things. My wife bought them, and she knows, like, she probably hear me. I was like, "The hell's this? Like, this is all sugar. This is just sugar." And well, she likes to give the kids treats because they're in high school, and yes, Daddy had his share of eating plenty of junk food too. But when you're a dad, it's like, hey, shouldn't be eating that anyway. But Americold, yeah, I don't really know about Americold, but as long as there's a demand to keep things cold, they're probably going to do okay. I mean, but I really know nothing about the business, so I don't want to. You work with cold a ton. Interesting. I think I seen an Americold business in Bolingbrook here, but I'm not going to pop in and ask. They're not going to know anything about that. Key customers. Oh, see, there you go. Perfect. You got to look into these businesses. Like I said, remember, you're always buying the business. It's not just the stock that you're buying. You guys are having, all right, I'm almost caught. I'm going to get caught up to you guys. And holy smokes, you own 1,366 shares of Vichi and like Ed Petoniak. Dude, JR, man, I love that, man. I'm probably buying more Vichi. I just had some dividends popping into the accounts, just falling in. So, as you guys know, I don't drip the. I don't like to. I don't know. I like to let the dividends. We say the dividends collect. I cut them with new cash where I can, and then I target redeploy them into something that I think looks like it's at an attractive price, or I want to build up or whatnot. So, yeah, that's a good point. Yeah, I know there's a good enough negative, positive and negative things. Why don't we make the English better to say about high institutional ownership, right? Because if they start dumping, then that can really tank the share price quickly, I believe. So, yeah, Vichi, I like them. I think they're good. And I don't know, does anybody own GLPI? Let me know. Apologies, I'm catching up. Michael, I see you put a ton in there. I love it. And TP, yeah, that's interesting, man. Dude, honestly, I've never looked into Dish as a business. I just know that we got rid of ours probably 5 years ago. And I know more people that don't have a Dish than people that do. So, but I don't know all the facets of their business. I don't know all their business segments. I don't know all the ways that they make money. And again, like you know more about them than I do. So honestly, maybe I could be convinced one day. But as things are right now, I wouldn't want to invest in them. But dude, I want all of us to make money. So that's just my opinion. And like I said, I hope I'm wrong. I hope I'm wrong and that you make money on them. So let's see. Oh, what's up, man? It's been a minute since I talked to you. Buying recently, mostly just Nexstar Media Group, Realty Income, Vichi, and I'm probably going to this week, if the market takes a tank tomorrow, I'm going to be firing up J&J again. I've really been waiting to start buying J&J again in the 140s. So I'm probably tomorrow morning just going to put in, or, it could be like Manish Pabrai. Manish Pabrai, famous Indian investor, he doesn't buy when the market's open. And it's funny because I'll do that. I'll be watching the phone. I'll be like, oh, I got to buy. No, he completely says I will only buy or sell when the market is closed. So he puts in his buy and sell orders to do it at a rational price, to not be affected by the emotion of watching the stock tickers flitter up and down in the moment. So probably good, but that's what I've been buying. WP Carry. I think Realty Income was ahead of the curve, right? They got out. Realty Income merged with REIT, which was a very similar company. They had a lot of overlapping businesses, so it made sense. Realty Income and REIT merged, and then what did they do? They booted out, and as I said, they shat out the office properties, or as we call them now, workplaces, into office property, ONL, right? Orion Office Properties, and that thing's just struggled. So they cut the dead weight into ONL, and I didn't sell it soon enough, but I did move on from it. Any earnings I'm looking to? Trevon, hey man, nice to see you again. I think Procter & Gamble is this week. AT&T is this week, so I'm going to be watching AT&T's free cash flow and listening to their earnings call to hear good old Pascal DeRoche and hear what he has to say. Oh, I wanted to tell you guys another interesting thing you can do if you're a nerd and you love listening to earnings calls like I do, to check up on a management team. You can go back 1 to 2 years, 1 to 2 years, not punch the mic, and listen to what they were saying, where they think things would be in 2023, where things are right now, and hear how close they were. Were they right? And that's an interesting thing because that can give us a way to grade them on the expectations that they were setting right now, where we're at today. Because, dude, CEOs, management teams can promise the world, they can put the lipstick on that pig, but if we don't have that thought process of like, well, 2 years ago they promised this and it's never come, and now they're promising more, so all right. Yeah, I love it. I got caught up to you guys. I'm so happy. I'm so excited. Vodafone. Do I buy Vodafone? Ignacio Montesino. I saw Ingo Montoya. Shout out if you know who Ingo Montoya is and why he wants to avenge his father's death. It's a great movie, Princess Bride. If you haven't seen it, you got to check it out. It's a classic. And Charles, I'm going to pop it on over to you. You're peeping in. You peeped in, but we got to peep out, man. So, and what do we peep out with? With Pee Wee Herman. You guys know I'm a kid of the 80s. I'm a child of the 80s. I was born in 78. So when Pee Wee's Playhouse came on, dude, very fond memories of watching him and getting ready for a Saturday. It was always on Saturday mornings. It was like, what a great way to start Saturdays. I love that. And I really do love you coming by. So this is why, everybody, we end with Pee Wee. Pee Wee says goodbye. He takes us out as I'm stalling to find it. I didn't have it slickly pulled up. So, dude, I love all you guys. And I will try my best next week to get caught up as quick as possible. And if you haven't signed up for the newsletter, Russ at dapperdividends.com, please do so. I love that. And dude, enjoy the rest of your Sunday. It's going to be an interesting week in the markets, and we'll talk about it next week. Whatever you guys want to talk about, we'll do that. So thank you all for stopping by and having communion with me, our dividend communion here once again on Sunday night. So I will see you next Sunday night, everybody. So long.